Right, let's give you a taste of the impact that people are feeling across the country. So if you had a R1 million bond over 20 years, you would have been paying around 7,750 Rand or so a year ago. Now you'll be paying around 9,500 Rand. So that's a difference of more than 1,700 Rand. That is for someone who can afford a house of R1 million. Obviously, the more indebted you are, the greater the impact. It's good for savers, though. Let's look at how this is playing out on the markets as well. We're joined by the Director of Inkunzi Wealth Group, Owen Nkomo. Great to have you with us.
Thank you, Francis.
As always, especially in studio. Thank you, Owen.
Thank you.
So interest rate hikes are paying for all of us,
Absolutely.
Anybody with debt. But obviously the Reserve Bank thinks inflation is worse.
Yes, absolutely. And the good thing, I think, for us in the market is that we know that the Reserve Bank is just going to keep chasing inflation. If inflationary pressures continue on the upside, we always bet on an increase in the interest rates.
Okay,
and
so at least you know what's happening.
Absolutely. at least we know what to expect. I mean, you look around the world markets, or rather the world central banks have been increasing by 75 basis points over the past couple of months, you know, in a bid to try and contain inflation, which was built up over the past 15 years of exuberance around printing money globally. So it's now finally catching up.
Yeah, and that is the point, that this is happening all over the world. We can't escape that. And we have to raise interest rates to make investments here attractive when everybody else is raising interest rates.
Yes, most definitely. And we cannot be in a position where America, Europe, France, and the rest of the world is increasing interest rates, and we're keeping interest rates lower while inflation is going up. We need to at least give our currencies a little bit of an edge to strengthen, even if the rand is strengthened marginally today. But I think that it's going to be one-way traffic until inflation starts to probably abate. And I think the most important thing that will see inflation coming down is a decline in the price of energy prices.
So let's bring up a graph from Trading Economics, which shows this near doubling of interest rates over a year. So the impact is huge. And the predictions are that we'll see yet another hike in November. I mean, do we see an end to this?
Look, I mean, at some point, once inflation is contained, once the prices of oil start going down, which is, in my view, primarily very dependent on what happens in Russia, between Russia and Ukraine. If oil prices come down, if our currencies start to strengthen again, I do believe inflationary pressures will come down. And hopefully the food inflation as well at some point starts to peak, which is one very big problem as well that contributes a lot to the broader inflation reading. So it will take time.
So you're not giving a date?
No, no one can do it. If you can tell me when the Russian-Ukrainian oil is going to end, then I would tell you, Francis, that on that day, potentially we will start hearing more people talk about lower inflation.
Yeah, and the Reserve Bank said we don't have a crystal ball.
Yeah.
The governor today. So the rand actually strengthened because we raised interest rates.
Yeah.
But overall, it's not looking good because we can't compete when the central banks of America and in Europe, they're raising rates as well.
Yeah, and the bad thing about this relationship between the oil price and the rand, particularly for us in South Africa, is that when the oil price is coming down a little bit, sitting down at $93 odd, the rand has weakened from about 1650 all the way to 1760 right now. It was a 1780 earlier. So unfortunately, we never seem to have it both ways, where the price of oil is going down and the rand is strengthening. So if you know that our imports broadly for oil are priced in dollars, so that's a conundrum that we're going to have to deal with.
Yeah. So those prices have come down, but you're saying that
the
may
rand has gone up.
Not last because of the rand. What does it mean for our economy that people are paying more for food and fuel and now more on their debt? So
most definitely. Yeah. So it means that if you're in debt, you're paying more. If you've got a finance structure, whether it's a loan for your house, for your car, or credit card, or you're a company that's taken on a lot of debt, it certainly means that you're going to be paying more out of your pocket. Just like the example you've used for that house that's more than R1 million or 2 million rands odd. And then the only people that might benefit here is people who are earning an income on an investment solution that is based on interest, because as the interest rates goes up, it means the money that they're earning is also going up. And people that lend out cash, that are likely to have very strong clients that pay, the cost of finance going up like this means they also are going to be making a little bit more money.
So it should encourage people to save, but we know South Africans aren't savers. And if you're banking on the markets, actually, then you're still not having a good time. And let's end there. I mean, the markets have been crazy, and it's also about interest rates going up in the US. Just tell us what is happening right now.
Yeah, so there's a big...
If someone's got a pension fund, what is happening?
So look, I mean, we always say that if you are invested, you should not lose sleep over this short-term volatility in the markets. There's been wars in the past, there's been the global financial crisis, there was COVID, markets came back. Now we're facing this Russian...
highs, incredible highs.
Absolutely, to incredible highs. And they actually haven't collapsed to levels where we can say we're extremely worried. Our major concern at the moment is that if the world goes into a recession, then you could see the markets come down. But like I was saying earlier, Francis, when stock markets go down, it does create some opportunities for us to buy some cheap stocks for investors. Let's have a long-term view. But to be honest with you, I think many central bankers at the moment are dealing with a picture they didn't expect they would deal with at some point soon. Where you got inflation in America being as high as 8%. So it's quite
bleak.
Yeah.
And are there opportunities in South Africa finally on the JSE? We know that a lot of companies have delisted or have simply declined because they're linked to our economy.
Oh, it's crazy. It's this increase in interest rates, the slowdown in the economy as you've had, we've tapered it down again, the expectations for our growth focus to the country. It just means that the engines of growth have halted. But when that happens, sentiment becomes negative. Some of these shares on the JSE and indeed globally might come down, and it creates, like I said, opportunities for us to buy some of those shares for investors in the long run. But what I can tell the investors at home is that, in the long run, the markets will go up. I think we just have to deal with this impact of interest rates having been so low for a long time. The printing of free paper money by global superpowers has come back to bite us. And unfortunately, like you said, there's no crystal ball to tell when that's going to stop. Markets will go up and interest rates will come down again sometime. We're just not sure when. Thank you very much, Inkunzi Wealth Group Director Owen Nkomo.